Good morning, everybody. Welcome back to Cilinix Crypto. Hope you're all doing great, and welcome to this new video, an update on Fetch or ASI. Wanted to make a video here because we have dropped down to the level we've been talking about for quite a long period of time now, and even a little bit lower. I mean, it's at this moment, Fetch is very much at the most crucial level we need to hold if we actually want to keep some sort of a bullish market structure here, which is going to be crucial. I mean, I think a lot of you will agree with me on that, because the main market structure we have been talking about quite a lot with Fetch, it's basically this, right? So we had this strong bullish breakout above $1, and there you can see that we are forming a bullish market structure. We had a bottom here. Got the breakout, formed a bottom, got a breakout, and now the main thing was forming a bottom here. So that is what we need to see. And at this point of time, obviously what's going on is that there's a lot of bearish pressure in the markets. Bitcoin on the lower time frames is still bearish, and just in general, the fundamentals are very mixed, right? The fundamentals were last week still very bullish. Last week, for example, we saw risk on assets such as Bitcoin, but also the Russell 2000, also the Nasdaq, recovering rapidly. The dollar strength index was bearish, which is bullish for crypto. So we saw all of that, which was great. But now the whole market fundamentally has turned, slightly more bearish at least. So that also means that something like Fetch, like if you take a look at this purely technically, if Fetch was very bullish, it would have bottomed right here at 1.45. 1.45 is a very strong support level historically. You have the 382 fib there. We even spiked down to the trend here. So the fact that we, on the daily time frame, because that's what we're looking at right now, the fact that we broke down below that and actually retested it is quite bearish. Now, there still is a lot of support right here at 1.36, even all the way down to 1.29 here. So what we need to see now, if we actually want to see a bullish Fetch in the near future, which given the market circumstances is going to be quite difficult, I'd say, what we need to see is that from this level right here, between the current market price and 1.28.5 cents, we need to get some sort of a strong support reaction. All right, that's the one thing we need right now to actually turn bullish again. All right, so some sort of a reclaim above at least 1.46, preferably also above 1.5, and preferably also above 1.56, but that's way too much to ask for right now. Reclaim that, and then we can be bullish again, get up to 1.72, get up to 1.85 cents. That would be great, but under the current circumstances and the way the lower time frame technicals look for Fetch as well, which is not great either, I would say that this is a possibility, but given if I would have to give it probabilities, this has a probability of like 20%, whereas turning slightly more bearish here on the lower time frames and dropping that back down into 1.25 and 1.15 under the current circumstances seems most likely. Now, it's not completely impossible that we will still see something like this. Like I said, I just think it's less likely. I mean, in the end, if you look at Fetch here, the last two times we pulled back, we also had these periods of time where we lost momentum and we basically trended down a little bit. But that does mean that if you compare the last two times to this time, and if you compare the fundamentals in the last two times to this time, we do need to do this in the next 2 days, right? So if we don't do this in the next 2 days, or we get a significant bearish breakout here, it's just technically more likely that we are going to fall down lower. So that's what I think you need to know. All right, those are my thoughts for now. Those are the crucial levels you need to keep an eye on. If you do have any questions, let me know down in the comments. But for now, thank you for watching. Take care and bye.